DFNS is a core banking and wallet as a service platform that provides secure, enterprise-grade wallet infrastructure and key management for digital assets. It allows fintechs, banks, and financial institutions to build and scale blockchain-based financial applications without managing the underlying cryptographic complexity. And as part of our Markets on Chain series with the Global Blockchain Business Council, I'm speaking with Jared Lee, the Chief Revenue Officer at DFNS. So great to have you here.
Thank you so much for having me.
So talk about the core banking for digital assets. What does that mean exactly?
So I think if we back up from blockchain to digital assets for a moment here, if you go on your phone and you log into your banking application, there's an enormous amount of tech that sits underneath that to be able to hold fiat monies and to move them and to govern them and everything we have around that. And that's decades of technology being built to enable that to happen. We now have a fascinating world happening within digital assets. And that's not just Bitcoin, that's the digitization of money, that's tokenized money market funds. It's a whole universe. All of that tech, very similar technology, has to exist to enable individuals, institutions to hold, move, govern assets on a blockchain. And fundamentally, that is what DFNS is. It's that full stack, the wallets, the policies, and so on that allow you to hold, to govern, to move assets on a blockchain, in fact, in a very similar way as you would normal fiat instruments.
So explain who would use this? Why would they use it? What are the benefits?
So we have a wide variety, a couple hundred clients globally, everyone from fintechs who are scaling up, some of which are doing it for their own purposes, meaning they're lending out funds, they're using it. They're using our technology to go and govern those funds. We have fintechs that are offering it in a business to business or business to consumer models, where they're using this as infrastructure to go power digital banking or digital securities movement and what have you. And we have clients, many of the world's largest banks. We work with a number of the globally systemic banks as core infrastructure, as they bring existing payment methods, new types of instruments on chain, whether that's for things like lending or whether that's for buy, hold, sell crypto. This is core infrastructure, really middleware type infrastructure that enables all that to happen on top.
Okay, so DFNS provides, I guess, the tech,
We
the
are
infrastructure.
purely a tech provider,
Okay,
and it's
and
a very deliberate.
they build on it.
They
People
build
on top of it.
So quite by design, we don't want to be the licensed institution. We want to enable licensed institutions where applicable, unlicensed where the regulations don't apply, to go and activate this type of business. We're the tech provider to actually underpin all of that.
So you mentioned big banks and big companies. I mean, security is so important.
Paramount.
Oh my gosh. So how do you deal with that? How do you make sure this tech is secure as it can be?
It's first and foremost for us. So for us, we are very much a security first company. You go look at our team, close to half the company sit within the security group. We cryptographers on staff. I mean, we can go through the list. We're facilitating well over $10 billion of transactions a month across a couple hundred clients globally. Zero hacks historically, zero hacks going forward. This is very much a first-class citizen for us. That's not just the kind of hand wavy, SOC 2, etc. We allow our clients, so for our biggest banks, for instance, we typically deploy fully on premises, meaning we're fully within either their private cloud or their data center, where they have complete control over the environment. They have full configurability. We've set it up in a zero trust model where neither we nor them need to actually fundamentally trust the tech. What do we mean by that? Anything that happens within there that changes something, you're sending a transaction, you're adding a user, you're giving a new user permissions, it creates a full audit trail of what happens that if you trust the cryptography, it can't be changed. So we always know who did what when, in addition to all the security layers. So it's very much a belt and suspenders across the full stack that allows banks to operate, financial institutions, fintechs to operate in the way they always had, delivering that trust to the end user, underpinned by a system that fundamentally enables it.
So talk about what you have seen change in terms of fintech and blockchain. And we talked about tokenization. This has been a huge year for the advancement of tokenization. What are you seeing kind of on the front lines of the industry?
It has been a fascinating journey, Jane. I've been in this space, we're going on a decade plus now. back to, if we go back far enough, we are having arguments of would this even survive? Was it useful? And we had a whole series of, we're going to do private permission things, kind of closed garden-esque. And now we're seeing major financial institutions operating on Ethereum and Solana, public blockchains. I mean, this was unthinkable a few years ago. Never mind that, we have these major regulatory developments, Genius Act already in place in the US, MiCA in Europe. Critically, what that's done is really up until that regulatory clarity point, we've had mostly fintechs operating in the space. With regulatory clarity, with regulatory certainty, we're now seeing financial institutions move in earnest into the space. And we're past the experimentation of, let me try this, let me do a proof of concept. We're seeing live deployments, serious money, institutional size money being moved. And we're seeing the leading institutions at the forefront making that multi-decade decision to go build core infrastructure, not just, hey, let me do an experiment. We're past the, I'm going to run a fiat bank and I'm going to run a digital asset bank. We're into the, hey, I want to run a bank. And I understand, just like in money, I've had checks, I've had wires, I've had ACH, I've had real-time payments. Now I have digital money running on a blockchain. I need to be able to govern that the same way I always had. And again, that's defense enabling that as part of the core rather than some sideshow.
So you think like the Genius Act was really the thing that gave these big institutions the comfort to spend the money and to move forward?
It's a good question. Domestically, it's played a major role, and we have more coming, more regulatory clarity coming on different aspects of the regulation with the Clarity Act and others. We have equivalent frameworks globally. Again, MiCA in Europe, Japan's been moving, Singapore, Korea, that's created clarity within those jurisdictions, which gives the certainty that established financial institutions need in order to operate. And that part is critical here. They need certainty in order to understand, how do they govern it? How do they treat the assets on their balance sheet? So we enable them to do it, and we're quite close to many of the regulators and much of the work globally as that's coming online, making sure that we're building systems that meet the regulatory requirements in those jurisdictions.
Has there been anything learned during that process, like in terms of what works, what doesn't, what needs to be improved on?
I think we've had a healthy evolution of the space. If we go back some years, the world was kind of locked on this idea of what we called cold storage, meaning I'm going to hold my assets offline, often air gap separated from everything else, separated from the internet. And we've come to a realization of, well, that can provide strong security guarantees in some cases. It also dramatically limits the functionality of what you can do.
Interesting.
Obviously, if we're going to have, say, Visa-sized, MasterCard-sized, payment-sized volumes, we can't be air-gapped moving a USB-type drive in between. Functionally, that doesn't work. So the technology has come much further. Now the regulatory clarity is coming much further of, hey, I need to be able to have many of these assets live so I can use them. And I can do it with systems like defense in a way that's safe, that's secure, that are properly governed, so that I can have that always on, always available, high velocity money movement while still having the security guarantees I have to be able to have in order to maintain that trust position as a financial
And
institution.
then also, we're doing this series with the Global Blockchain Business Council, and I understand you are a risk assessment partner
We are.
with the GBBC. So talk about that. I mean, can you share more about the zero trust model? How does that support institutional risk controls?
So GBBC has been wonderful, wonderful partner. They're helping drive significant initiatives in the industry, one of which, at least in our mind, is raising the bar for what can reasonably be expected. And our stance has been quite clear, which is that we believe that the goal of the technology, the goal of the assets, banks have done a wonderful job. Financial institutions have a wonderful job establishing trust with their end users, establishing trust with the regulatory bodies and with the surrounding industry. Everything we build here, we can't compromise on that position. There's a standard that has to be met in order to deliver these safely, in order to deliver these securely to the industry. And what we're doing with GBBC, is we're helping push the envelope of what we know is possible. We know is possible in production because we're doing it, and make it more generally available so that the banks, the financial institutions, the up and coming fintechs can continue to operate that standard, even with a wildly new, wildly exciting new asset class, new set of technologies.
Now, what do you see as where this is going? And what about, the average person? Will they notice will my mom notice anything when she goes to do her banking?
I answer that question at home probably more than I should. I think there are two aspects of this. One is, if we just look at what I think of as the incremental side of this, the advent of ACH, the advent of Venmo didn't get rid of checks. It didn't get rid of wires. It simply created a new play space, a new palette that we could paint with for different types of money movement that we'd never been able to do before. We see the same thing with the internet. We have this thing called a JPEG that's an image. Doesn't mean we don't hang pictures on the wall anymore. We now have this thing that you could never have a physical picture be a profile picture. That doesn't make a lot of sense. You couldn't use it to send funny pictures to your friends over text. But nonetheless, we value both. So the digitization of money, the digitization of instruments, I think in that sense, we're going to see an incremental approach where it's growing the types of things we can do, in which case to my mom, where this is largely hidden beneath the hood, right? I can send it faster, I can send it more securely, and so on. There are other places, and we're seeing a real explosion of this with tokenized money market funds, where it is a stepwise change. So for the first time, we can move money market funds instantaneously. We can move payment and asset at the same time. You think about what that means for the industry. All of a sudden, we can take counterparty risk out of the industry. We can take trapped capital back and put it to better use. While that's not going to, in theory, change the day-to-day of my mom's experience, what that means is the major brokerages, retail brokerages that she interacts with, under the hood, their costs go down, the risk comes out of the system. Ultimately, that does very much flow to the end users of, hey, we've built a fundamentally stronger system. Inevitably, that rising tide lifts all boats.
Well, it's absolutely fascinating to watch. So
It's
thank
enormously
you,
fun.
Jared, for coming and explaining defense.
Jane, thank you so much.